Hey guys, it's Hovis here, and this video is going to help you identify the different signs you need to be looking for the next market crash and what to do about it. Hang on to the end of this video, and I'm going to give you applications for how to prepare yourself for this next crash. But before I do that, hit the like button, subscribe. Now let's get into it. I get a lot of questions from people asking me when they think the next market crash, particularly the next real estate market crash, is going to happen. And the short answer is, I don't know. Nobody knows. Frankly, I just think that it's a blind squirrel finding a nut. But there are a few signs that I feel we should be looking for in preparation for the next crash. So the number one sign that the market is about to crash is they can't print money anymore. Right now, the reason our economy is, quote, doing so well is because we have printed a historical amount of money. I read an article that said that 20% of all the dollars that have ever been printed or created were created in the year 2020. That's crazy. We have printed a large amount of money and stuck it in people's hands, hoping that they're going to be able to use this to live on until the economy recovers. I am not a Wall Street analyzer. I'm more of a Main Street analyzer, and it has served me well over the years. I'm listening to regular, everyday people and making decisions based on how I see all of those people responding to this market. Those are the people who are driving our economy. And so what do I hear from Main Street? There are some people who wouldn't be in a job right now if it weren't for that PPP loan. There are people that literally would not be able to make rent payments, car payments, whatever it might be, if they hadn't received that $1,400 or $600 or whatever the number is into their bank account. If we can't keep printing money, we're going to see a market crash. What would keep us from being able to print money would be a split Congress. If the House and the Senate were ran by different parties. Right now, the House and the Senate with a Democratic administration, they're all in the Democratic Party. Because those three players are on the same team, they're going to do whatever it takes to make it so that the economy doesn't crash on their watch. However, we've got a midterm election coming up in 2 years. What happens if the Republicans take either the Senate or the House or whatever it might be, and now we have a split Congress? They're not going to agree to printing more money, and if they stop printing money, our economy is going to be in really bad shape, particularly if we still have COVID restrictions. If we can get some of these restrictions, if we can open up, if we can get back to normal, we might be okay. We gave a whole bunch of business owners a lot of money to operate their business, to help pay for payroll in that PPP loan. Well, if a smart business owner is able to continue his business and continue to make money, and you've got the government paying his employees, now what does he do with the profit that he's made not having to pay those employees? Well, he's going to reinvest it back into his business, in the stock market, cryptocurrency, or real estate. And so because you've got these business owners reinvesting across the country, you have house prices going up and you have inventory going down. The rent in most area is too high. Wages have not been able to keep up with the price of rent and definitely not been able to keep up with the price of housing. We have fewer people able to afford to buy housing, but if we get to the point where we can't print any money, you're going to see a market crash. You're going to see business owners taking their money off the table, waiting for the carnage. If we had a split Congress right now, we would already see a market crash, but we don't. We've got one party that wants to make sure that they can print enough money to be seen as the saviors of America, and they'll continue to print money, stimulus money, to keep people happy. It's hush money. However, business owners know it's not great right now. The travel industry has been hammered. The restaurant industry has been hammered, and they have been hemorrhaging money. The only thing keeping a lot of them in business is the fact that they were given some money as stimulus and help. That's it. The number one sign to look for is not being able to print money. But the number two sign is that the Fed raises rates. Right now, we have been at historic low interest rates. Interest rates we have never seen before. And part of the reason why we're able to do that is in the stimulus that we've seen, banks have profited greatly. Every PPP loan that they did, they got paid to make those loans by the federal government. When a borrower borrows money from the government in that PPP loan and then takes that money and sticks it in their bank account, what's the bank allowed to do with that money? They're allowed to lend on that money. So the banks right now are okay with low interest rates because they've been getting paid off big time in the stimulus packages. What happens when they can't make more loans? When the Fed raises the rate half a point, whole point, one whole percentage, you will start to see the demand for loans going really low. And if they don't get loans, the banks don't make money. And if the banks don't make money, now we have some significant decline in our economy. It's a compounding effect. Federal Reserve right now is keeping rates low for a reason. They can't increase them. If they increase them, they fear a market crash. That's the balancing act that they're playing, is raising rates and crashing the economy. So a sign to look for in a pending market crash is that the Fed raises rates. Number 3 has to do with new regulations or reinstituting regulations. We've already seen the effect on oil prices and things like the Keystone Pipeline and other areas of regulation that Trump had deregulated that Biden reinstituted. If we have more regulation, it's likely that some industries and some businesses pull back, possibly even go out of business, possibly go to other countries. Depending on what the regulations are, could indicate that a market crash is coming. Now, I don't put a lot of stock in this one. And the reason I don't is because I don't know what regulations are going to have an effect on the economy. I don't know what regulations are going to have issues. All I know is if businesses start leaving the country or start shutting down and there's layoffs due to certain kinds of regulations that have basically collapsed whole industries, what's likely going to happen is that new industries will come up. When one thing dies, something else sprouts up. The issue is not the dying and the growing of different businesses. The issue is the time frame between figuring out what's going on one side and then bringing another business up on the other side. The fourth and final sign you should be looking for in a pending market crash is the increase of taxes, that the tax laws change, that certain things get shifted. There's a lot of talk about the different kind of tax plan that Biden is going to implement that could have some devastating effects on people. It depends on how aggressive that gets. It depends on the response that businesses have. Corporations are not going to just roll over and allowed to get an incredible amount of tax increase without doing something about it. It all depends on what that tax is going to be. I don't believe that the taxes will increase to such a significant amount that people say, we're out of here, we're having to lay off people because of the taxes. I don't think that that's as big of a deal initially, but it might be eventually. So my point in paying attention to the tax category for a pending market crash is how aggressive this tax plan is. Trump's tax plan lowered a lot of incredibly wealthy people's taxes, particularly real estate investors. If Biden wants to get a lot more aggressive with taxes, that's something to be concerned about, that people just start saying, hey, we're leaving the country. We don't want anything to do with this anymore. I've heard more people talk about leaving the country than I ever have in my entire life. However, will it be enough, both from a personal standpoint and from a corporate standpoint, to cause a crash? I don't know. I don't think so. However, these are the signs that I'm looking for. There's a significant chance that all 4 of these things happen simultaneously or within a short period of time. If we're unable to print money, the Fed raises rates, we've got increased regulation, and taxes go up, I have a feeling that investors are going to want to pull their money out of the market, out of business, put it on the sideline, and wait. That's a possibility. It's a significant possibility. These are the 4 things that I'm looking at to anticipate a pending market crash. But the real reason you're here is to figure out what to do about it. So I've got 2 points. Number 1, get your personal finances under control. Stop taking on debt. Start saving money. Start living on a budget. Live below your means. It's the fundamentals that guys like Dave Ramsey talks about. If you don't know who Dave Ramsey is, pick up one of his books and read it. Now is the time to not take your stimulus money and just blow it on doodads like Robert Kiyosaki talks about. Now's the time to be smart with that. Put some money away. Pay off a credit card. Don't get more credit cards. Follow basic personal finance steps. Have an emergency fund, create a budget or a spending plan, as I like to call it. Make sure that you're not taking on any more debt. Be content with what you've got. If you take the time and actually implement some discipline in your personal finance, if the market crashes, you're going to be okay. The second thing from an investment standpoint is to prepare for a market crash, you should be investing in cash flowing assets. And the number one cash flowing asset that I know is rental property. If you're looking to invest, I suggest getting in rental property, real estate. Understand that people like to live in houses. There will be someone who will pay you money to live in your house. Invest in that, because as we continue to print money and as inflation continues to go high, and one day we pay $20 for a gallon of milk, what's going to also keep track with that is that asset, that commodity, that rental property that someone has to live in, that wants to live in, that likes to live there, and they will pay you money for it. Rather than gambling with Bitcoin, rather than gambling with other aggressive investment strategies where you can lose it all, play the safe game, play the long game, buy cash flowing assets, buy rental property, and allow that passive income to actually make you wealthy. When your passive income is larger than your monthly expenses, you are now wealthy. Acquire those assets. And if the market crashes, great. You just get a discount on buying those houses. Whether the market goes up or down matters nothing to me, because I own a commodity that people want to pay me for. Even during this pandemic, my rent collection has been through the roof. We have collected more rent percentage faster than at any time in my company's history, because when they've got to make a decision between buying the newest iPhone or living in their house, they're choosing that house. They don't want to become homeless. They can keep their outdated iPhone. They can't not pay me. And so you want to get into real estate investing, holding cash flowing assets, particularly single family houses, that will pay you month in, month out for as long as you hold that asset. You get to control it all. Those are the 4 signs that I'm looking for to anticipate a pending crash. That we can't print money anymore due to a split Congress, that the Fed is going to raise rates to make the banks happy, that regulation is going to make it more difficult for businesses to grow, that taxes increase so much that businesses and people have to switch strategies, and it affects the economy in a negative way. However, I don't care about any of it. I don't care if the market crashes. I don't care if it keeps going up. Property values keep going up, it's good for me. Rents keep going up, it's good for me. Property values go down, it's good for me. I can acquire more. Rents in single family houses don't see the significant ups and downs that they see in apartment buildings. So typically I'm able to still get the same kind of rent, and I have a commodity that someone needs that's going to pay me over and over and over again. That's cash flow, that's passive income, that's wealth. And if you want to weather the storm of the next market crash, care for your personal finance. If you have the ability, you have the means, start acquiring cash flowing assets. Start implementing those strategies today. Hey, thanks for watching. I really appreciate it. Do me a favor, hit that like button, subscribe, and I'll catch you on the next one.